So our topic is the case for hard money or private lending in real estate. So talk to us. Tell us a little bit about what is hard money or private lending in real estate.
So private money differs a little bit from bank loans. Basically, private money can be anywhere from one individual just lending the money to small companies, corporations, and the like. But basically, it's not a depositor putting money in an institution and then getting money from that, which certainly in the past most people are familiar with, and it was a more traditional way, certainly to get your home loans and things like that. The good news about private money, because it's much more entrepreneurial than the bank, it's quicker close. It's easier to obtain. Most cases, it's collateral based, where the banks are very strict in most cases with credit, and most cases it's cash flow. So basically, the private money or hard money lending business is based on collateral. Almost like the old pawn shop. You give me a Rolex watch, that's the collateral. It's worth $10,000. You leave. If you never come back, we sell the Rolex. We get $5,000 for it. We get our money back because we only loaned you, in that case, a third of what the value was. So it's very, very similar to that, where, again, it's collateral based. And that kind of is the big differentiation between that and, let's say, the typical bank type loans.
So there's a spectrum of lending, from bank loans on one side to true hard money that's only collateral based on the other side, and there's lenders somewhere in between there as well, right? So if you could maybe talk to that as far as what some of those variations, the different types of private money lending might be.
Okay, very, very good question. So basically, private money can be anywhere from one individual just loaning a friend money. That's a private loan, to a full plethora, let's say, of other type organizations. And what I mean by that, there's many small companies around the United States that actually specialize in private or hard money lending. They're family offices. Guy basically, has a company and he has a pension plan, for lack of a better word. He might segment a small portion of his pension plan to make private loans because he can get a higher yield for that pension plan. Insurance companies do private loans at different levels. And there's hedge funds that also make private loans. So there's really a full gamut. It used to be an industry where individuals or small companies did it, but now it's really opened up to a huge amount of people around the United States. Now, within that segment, there are what I call different type of lenders. So there's lenders, what I call loan-to-own people. These would be people that make a loan in the hopes that people default, so they actually can take over the property, and it's a different way of buying real estate. To the other side of the coin, where people are not going to make any loans whatsoever unless it's almost like bank quality, but maybe they can do it a little quicker, and therefore they'll do it. Now, in terms of, let's say, within the spectrum, I'm going to put it into three categories. Category one would be the competition for the banks. The banks right now are somewhere around high 5%, 6%, maybe even 7% as far as their rates go. I would say to you that would be category number one. Category number two would be the hard money guys. I call it the look like and lend people, where they basically do it at high yields from 10 to 12%. They do it quickly within a couple of weeks. And again, in most cases, they're very collateral based. And then there's the middle category. I would call them the soft hard money. And they're in the 7s and the 8s. Again, they're not going to be as difficult as the banks. And by the same token, it's a good place to go to get loans, which will be a lot easier to close than the bank. And a lot quicker. Let's say a bank loan might take 60 days, at least commercial loans, probably 30 for residential. The middle category I just mentioned, they're probably about 30 to 40 days, and the private category is somewhere around 3 to 4 weeks. So that's kind of a little bit of an idea.